How do real estate investment trusts work? That's a REIT. That's right. A REIT, a real estate investment trust. It owns property, it operates property, and it produces revenue. How does it apply to real estate and investing? Well, someone can invest in a REIT that generates revenue, but really doesn't have the back end appreciation of investing in real estate, privately. Now, REITs, like I've told you in the past, are also part of the stock market, and they also invest in all different types. So let's get into some of the specifics on how REITs work and how you can invest your money in a real estate investment trust. Liew, author of the Modern Wealth Building Formula, the 11 Millionaire Secrets, the 8 Golden Nuggets, and all of that good stuff. But check out what we're talking about today, real estate investment trusts. Why would you want to invest in a real estate investment trust? Because you don't have to do anything. That's right. You have a little cash laying on the side. You want to invest in real estate. The real estate investment trust is the way for you. They own, operate, and give you a return. So that's why you want to find out a little bit more, which we're going to get into right now. So let's talk about the properties that a real estate investment trust may have. Well, real estate investment trusts specialize in all different types of markets and sectors. There are mall REITs. There are multifamily REITs. There are commercial REITs. There's all different kind of REITs. So that's the beauty. You can get into an industrial REIT or retail REIT. Some of them are struggling, but a lot of the real estate investment trusts are doing real well. And if you remember about the stock market, they're trending a little bit under the national average, but I have a couple REITs and I'm making my 6, 7, 8%. So check it out. That's one of the advantages, that you do have latitude in the different sectors and different markets with a real estate investment trust. There's a couple different types of real estate investment trusts. What we're talking about initially, what I would say would be called a hybrid real estate investment trust. They both own property and potentially hold mortgages. Now, if you break that down, there's mortgage REITs that hold mortgages on real properties that you're investing in them holding the mortgage. And then there's equity REITs that own and operate income producing properties, which you may say that's what we were talking about initially, but I had a different thought because a lot of REITs can do both, and it's really in the language of the operating agreement. So when you're getting involved in this different type of REIT, you want to check out those documents. There's an operating agreement. You're going to learn about what the REIT's all about, what their portfolio is about, what their P&L is about, what their balance sheet is. You're looking at a company, right? Because you're buying into a company that then buys the real estate portfolio and shares the profits with you through distribution, just like a stock. And the beauty of this is the liquidity, like we've spoken about before. So real estate investment trust is very good for someone that wants to be passive, get involved in real estate investing, that doesn't have a lot of time. So what I wanted to tell you was one of the unique factors of a real estate investment trust. So when you reach that status of real estate investment trust, you're normally in the $100 million range. And the beauty of it is that real estate investment trusts, by law, are required to distribute 90% of the profits. I mean, that's beautiful, right? That's what you want, because as a result of this, REITs are actually exempt from corporate tax because of that distribution of 90%. It makes sense, right? Corporations are taxed. Since real estate is distributing all the profits, the government really doesn't want to tax them because they're essentially a powerhouse in real estate, enabling the nation to invest in it, just like a major stock or a major corporation like Exxon or IBM. That's what you are investing in when you invest in a real estate trust. Guys, so, really what I want to tell you about a REIT, which I may not have mentioned, it is a partnership, a corporation, and it's directly purchasing these properties, so, and in addition to being a company where it might sound, that it doesn't have congruency, it's also like a stock, right? So it's a unique component to invest your money into, versus if you're investing in a single family home or a commercial piece of real estate where you're just dealing with a tenant. It's a slightly different structure. You're actually investing in a securitized investment. Now, real estate investment trusts protect you. For example, a lot of times you have to be an accredited investor to invest in a real estate investment trust. It's probably in most cases. Now, an accredited investor has to make, I believe, more than $200,000 a year and has to have $1 million in net worth. And why? Because the SEC protects the investor, just like investing in a stock where you don't have to worry. Yeah, I told you to read the agreements and all of this kind of stuff. You're reading the agreements to get knowledge and understand maybe more about the what ifs. When you invest in a real estate investment trust, just like a stock, you are protected by the SEC, and that's the beauty of it. So I just want to leave you with a thank you, guys. Thank you for, always checking out my YouTube channel. If for some reason you're here for the first time, please subscribe by clicking below. If you haven't checked out my 11millionairesecrets.com, check that out. It just teaches you how to earn your first $1 million. If you haven't been to my website, check out kenvanliew.com. And if you want to get in touch with me, check out the 45-minute free planning session. And like always, make it a great day.